How much does the average economist think like the average American? Like oil is to water, according to a study done by Chicago Boothe School of Business. Joining me now is the study's author, Luigi Zingales, professor of entrepreneurship and finance at the University of Chicago Boothe School of Business. Professor Zingales, welcome to the program.
My pleasure.
This is such an interesting study. You found economists think nothing like average Americans.
I think that the part is surprising is not that they think in a different way, but they tend to think very differently from the average American on the topics where they are most expert and where they agree among themselves the most. The most they agree among themselves, the more distant they are from the average American.
So what does this mean then for the economy? If they think differently than average Americans, how are they able to put in place the proper economic policy incentives to boost growth?
First of all, being different doesn't necessarily mean being wrong or having the wrong suggestions. In fact, you would expect experts to know more and so provide answers that the average American cannot think of or they don't necessarily understand. What is surprising about our study, however, is that we try to let the respondents know what the economist consensus was on the topic, and still they tend to differ substantially in drawing policy conclusions. So it is possible that either the economists don't understand all the complexity of policy analysis, or that people completely disagree with the economists.
Well, but I still want to put that question again to you, because if the economist is thinking on a completely different level than the average American, I mean, how can they say, okay, well, if we put X policy in place and this is how, the average American is going to respond, and therefore they're going to go out and spend their money, or they're not going to go out and spend their money, right, to juice growth?
First of all, I fundamentally disagree that the way to boost growth is to make people spend more money.
Right, that was just an example. That was just an example.
Okay, but let me make an example that is within the set of questions we ask, so that we would make it more clear. The vast majority of economists think that having a gasoline tax is a much better way to deal with the problem of pollution than any other form of regulation or a mileage standard for cars and so on and so forth. And economists fundamentally agree that's a better solution. When you ask people, they disagree. They prefer a standard for cars rather than a tax on gasoline. And so one interpretation is that they don't understand the economics underlying. They don't understand that when you have a standard on cars, this will increase the cost of cars. And so they end up paying more for cars rather than more for gasoline. We tested that. We asked people whether they understood that, and they do. The majority of people, I'm not saying everybody. So it's not this is the explanation. The second reason is that they might be untrusting or mistrusting of what the government is going to do with the money. In a sense, it is true that we economists think that a gasoline tax is better than a mileage standard, because we assume that it's very easy for the government to rebate the additional revenues raised to their citizens.
Well, let me ask you this, Professor. Are economists currently prescribing the right policies for growth?
Depends which economist you're talking about. I think that if you listen to Paul Krugman, the recipe for growth is to spend more and more of government money.
Well, we already saw Reinhardt and Rogoff debunked, right?
Yeah, but Reinhardt and Rogoff was simply saying that there was a correlation between those two variables, and that correlation proved not to be so strong in the data. I think that the fundamental point is whether you can keep spending without limit, or if having a high level of debt creates a problem in a country. Now, I come from Italy, a country that tried that strategy and now has 130% of debt to GDP. And I can tell you, it's not a pretty picture. So should we avoid to go there and cut everything now? No, we should cut slowly, but we should avoid falling down that path.
All right. Mr. Zingales, thanks so much for your time and insight. I so appreciate it.
My pleasure.
Luigi Zingales, Professor of Entrepreneurship and Finance at the University of Chicago Boothe School of Business. That's our show. Thanks so much for tuning in. As always, watch us online at www.youtube.com/Wall Street Report. Email us at wallstreetreportwithjen@gmail.com and follow me on Twitter @JenniferZone.